Markets Now is brought to you by Durastack Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durastack Technology features 3 powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.
Welcome to Markets Now. I'm Michelle Rook with Dan Basse of Ag Resource Company. We had a lower day in the livestock futures, mixed to mostly higher over in the grain trade. At least in the soybean market, we were higher. And Dan, let's talk about that. USDA ending stocks left unchanged at 350 million bushels. We saw a little bit of an increase in the Brazilian crop, but the market did not trade it, did it?
No, the market's looking forward to hopeful demand from what Trump said last week in the 8 million tons and then the RVO SRE that are supposed to come in March from the EPA. So that's what we're focusing on right now, Michelle. It makes a little bit of sense, but at the same standpoint, bulls need to be fed every day, and you wonder if this rally can keep going without some news somewhat.
So we got a little bit of export business on the flash sale yesterday to China, but nothing today. You say bull markets need to be fed. How much business do we need to keep coming at this market to continue to rally?
Yeah, well, I believe that sale yesterday was due to what's called bookkeeping in COFCO, Geneva, and Chicago, and was not part of the new 8 million tons. So I think that was part of the 12. That being said, looking forward, I do need to see the Chinese asking for offers out of the Gulf or PNW, coming forward with some kind of demand, and then we can feel a little better about Trump's request of China. One thing that bothers me about the whole transactional thing is Trump is transactional, China's tactical. And so China didn't get anything from saying of the 8 million tons. When Trump sold them 12, we got a 10% reduction in tariffs, 50% of the reciprocal tariffs tied to fentanyl. This one, China's sitting there saying, well, what's in it for me? And so that's a little bit of the problem why I believe the Chinese are holding back.
Why would China buy Brazilian soybeans, right, or U.S. soybeans right now when Brazil's so much cheaper than us?
It would be political only. In other words, can I grease the skids for Trump coming over in April? Is there some reason that I, as China, get another reduction in tariffs in the future? Why it would have to be? That's why I said that there needs to be a reason for China to lose $35 or $40 million for each metric ton of U.S. soybeans they buy relative to Brazil.
So you said you have no proof of any business off the PNW or anywhere else to China yet. So, I mean, this market right now, do you think we're going to get that 8 million metric tons at all?
My own assessment as an ag resource company is that we'll get about half of it. We'll get something, but it's not going to be the 8. It may be something between 2 and 5. We're settling on 4 right now and telling our clients. We think that's a midway point, but I also believe that the 8 is too much of an ask for China. They don't need the beans. They're going to be selling them out of reserve once the Lunar New Year is over. So from my perspective, China's going to do something just to appease Trump, but not all 8.
If you got even half that business, could you go back up and retest the November highs in beans or not?
So again, if we got half of that, I'd say May beans at somewhere between $11.50 to $11.75 are fully priced. So we're back up against some of the old highs that we were back in November. I think that's about all we can do, at least in this rally.
So USDA put the Brazilian crop at 180 million metric tons today. I know that didn't surprise you because there's estimates that are bigger than that, aren't there?
Well, I've had a team on the ground now in Brazil for the past 5 weeks, and our numbers are coming up about 11% better than last year, down to Mato Grosso do Sul and catching half of Paraná. So our own analysis is that we have a crop between 184 and 186, possible 188 if that yield trend continues all the way through Rio Grande do Sul. We won't know for another couple of weeks, but there's some really big yields in Brazil. Some of these fields are yielding 90 to 100 bushels an acre.
We're hearing of some quality issues, though, where it's been too wet. Is that true?
That is true. Beans are coming out at somewhere between 16 and 17% moisture. They are going to take some commercial drying, whether it's at port or at farm, I think is yet to be decided.
The other thing that supported the soybean market today was new contract ties in the bean oil market, right?
Yeah.
Do you continue to see that market pushing higher here, trying to work in India, possibilities of them buying? Is this 45Z? What is it?
It is India and then the RVO SREs, if you will. The market's trying to look at India and saying, well, it could take an extra 150,000 tons of U.S. oil on a 0% duty if there was a quota. And then it's looking at the RVO. And, the RVO keeps circulating that it's the last thing the Trump administration can do to help the U.S. farmer. So it's going to be very good for the the producer, maybe about 5.4 or 5.6 billion gallons versus 3.9. And so the market sees this as a hope that Trump can really help the bean oil market, and it will help beans to some respect. The problem will be longer term is an abundance of meal, because Brazil, Argentina, and the United States are going to go full on in producing meal. And so I'm looking for oil share to continue to increase.
Funds have been piling into the bean market in a big way, though, especially old crop, haven't they?
They have, and they like the charts, they like the technicals. The market's performed, and so this is what happens when you get a momentum trade. After Trump spoke, there were the bean market rallies 50 cents, and these funds managers see the charts and say, I need some more of that.
Why didn't USDA make any adjustments to ending stocks on soybeans today with this added China business?
So the reason being is that USDA needs statistical evidence that there is a deal and that China is going to be buying. Today we only have President Trump requesting China to buy 8 million tons. We don't know if the deal's been done. We don't have any signed paperwork. We don't even have a handshake or a nod. So with that in mind, we're waiting for more details before USDA will make an adjustment.
USDA lowered ending stocks today on corn in the report. We saw a 100 million bushel increase in exports. Were you surprised with that?
We believe the corn export pace justified the increase. Where I was surprised is that it happened in February and not in March. USDA has a history of waiting till March to make these kind of adjustments. They did it proactively, so kudos to them on that. But again, we still have 2 billion bushels of U.S. corn in the market. Didn't seem to pay much attention.
Is there anything that can get us below 2 billion in your mind?
It would probably have to be something on domestic, like feed and residual. Let's say we are underestimating that, or maybe ethanol. But I'm worried that on the export side, Argentina and Brazil are now offering corn below the United States. This is the first time this has happened since late July. So with that in mind, U.S. exports should start to tail off seasonally, and I think we need to be aware of that.
Yeah, were those export front-loaded? Do you think, the corn exports?
I think to Mexico they were front-loaded, and that's the key country. Mexico will take 1 billion bushels of U.S. corn this year, but that demand looks like it's front-loaded. So we could find ourselves in a position that if we only have Mexico and Canada as customers and the rest of the world buys from Latin America, that corn export estimate at 3.3 could be a little large, and we'll see adjustments. But we've got a half of a crop year to decide that.
So we're stuck in this trading range for a while here, huh?
We are still in a 410 to 440 kind of range in corn. The wheat market is oversupplied by 31 million tons, nearly 2 billion bushels, and so generally speaking, the grains are trapped in ranges as far as I can see, unless someone gives me a weather problem.
Well, and every time you get to the top end of the range on corn, farmers start to sell, right?
Well, the data shows that the most undersold position in grains is corn for the farmer. He has done a good job of marketing beans. He did an okay job on the rally last fall of marketing wheat, but he's got a lot of corn left over. So anytime we get close to the top of the range, someone rings a bell and the farmer starts to sell.
Yeah, and as you point out, wheat has been an anchor on the corn market, and wheat just can't get out of its own way, can it?
No, it's got so much supply. Now the Russians are falling behind on their marketing because of bad weather and the ruble, the cost of the ruble. So when you think about it, there's going to be real aggression in exporting wheat, and so world traders will look for lower prices as we head into the new crop in April, May, and try to get rid of this old crop supply that's so heavy.
The cotton market did not get any favors today either in the WASDE, did it?
No. The cotton is still a oversupplied market. The best thing for cotton will be the drop in acreage in cotton and rice as we think about the new year. A lot of those acres could come back to the row crops, corn and soybeans, and there's some people like me that worry that the overall pie for the corn and soybean market, maybe 182 or 183 million acres versus 180 last year.
All right, I was just going to ask you what you saw for shifts in acreage as far as if soybeans get over, how high? 1150, then does corn have to try to catch up or not?
I think corn can kind of stay where it's at, but I do think you're going to see more bean acreage, maybe 86.5 or 87 million acres. That's up 6 or 7 million acres from last year. Farmers like rotation. Bean crops are cheaper to produce. If spring weather is favorable, farmers are now planting beans earlier. I think they could really run at the bean market. We see a big jump in acreage there. That would take corn down to 93 or 93.5. That's helpful to corn, keeps us a little more balanced, but I think beans or oilseeds are the crop that every farmer is trying to plant more of this year.
All right, so with that scenario you just talked about, you get corn ending stocks under 2 billion, and then how much higher over 350 million bushels do soybean ending stocks go?
So my ending stocks on soybeans are somewhere between 450 and 500. So the message to producers is if you get beans up to 1120 or 1150, you need to be selling some beans for next year just to prepare, sell, and defend.
One last question about USDA. Obviously, investigation right now about these harvested acres. How do you think that's going to play out?
I expect they'll do a complete review. This is not unusual that the USDA has these kind of statistical reviews. A few years ago, we did one on seed, feed and residual for corn. I don't think they're going to find anything. I think we're going to look backwards in time and say, yeah, farmers reported on June 1st X amount of acreage. The sampling size was smaller, and then as we got FSA data incorporated, we found extra acres, and I think that's the bottom line of it. So we're going to have to live through those big corn acres and the extra supplies.
Cattle market sitting back here today. Do you think that was just some profit taking? Is that market getting tired?
I think we're getting altitude sickness, which is what I'm saying. When you get up to 240, people look at that and said, well, is this a price I need to worry about consumer demand? I'm not seeing any evidence of consumer demand backing off, but it's also a price level where we're going up there and packers are losing so much money. You worry about their financial wearability. So I think 240 to 250 is about high as I can push the cattle market today. And then we don't know about the border. We're still watching it very carefully in terms of will it open if a fly is found on the wrong side or our side? What will they do? And we're not quite sure.
But if cash trade is higher again this week, all bets are off? Or
I think futures will continue to be priced at a discount because of the fear of the future. And so we can see the futures market moving up. But ultimately, I think we need to get into a seasonal time frame of maybe 1st of April or something like that. And then the downside risks start to become more important for the cattle market.
So last week's highs cap us for a while, you think?
I think we're in places of resistance. I wouldn't be surprised you could make a slightly higher high, but don't chase rallies in the cattle market right now.
And don't think we're going to get back to the October highs? No?
No. Well, we're getting very close to those right now, so it's there. So again, at 240 to 245, I think altitude, if you will, starts to play out in the cattle market. Not so much from the consumer, but from the packer, and how much loss can he withstand.
Okay, thanks so much as always. Dan Basse joining us from Ag Resource Company, and that is Markets Now.
With corn rootworm costing farmers up to $1 billion a year, you need the right strategy. Introducing Durastack trait technology, featuring 3 powerful modes of action to strike corn rootworm at full force, outsmart, outmaneuver, and outmatch their every move with the industry's first triple BT protein stack built for corn rootworm control. Take back your yield potential. Make your move at Durastack.com. Available for the 2027 season.